SoFi Technologies Inc. agrees to buy Technisys in an all-stock offer worth $1.1 billion. So what you're looking at right now is a report from Morningstar, and the author of the report is Michael Miller, and they are just saying what you already know, that amongst other things, that SoFi announced they are buying Technisys in a $1.1 billion all-stock acquisition. Technisys is a banking infrastructure company, and this will complement the existing technology platform that SoFi Technology already has, which is Galileo. So the company intends to issue roughly 84 million new shares, and Technisys will come with no material debt on its balance sheet. Technisys offers technology to support multi-product banking services that SoFi intends to integrate with its existing Galileo offerings and implement it in its own technology stack. Okay, as the author or the company, which is Morningstar, as they adjust their model, they are reducing their fair value estimate for SoFi from $22 to $20. Roughly $1 of the reduction is a result of the acquisition. The remainder is the result of adjustments to the near-term assumptions for SoFi's lending arm, particularly in its mortgage lending. So SoFi expects Galileo and Technisys to benefit from cross-selling synergies, as both businesses will have the ability to sell their respective services into others' user base. SoFi expects the deal to add $500 million to $800 million in cumulative revenue from 2022 to 2025, which should be achievable as Technisys comes with around $70 million in 2021 revenue and stands to benefit from Galileo's large existing user base. That said, banking technology deals tend to have a long sales cycle, and the folks at Morningstar expect much of the incremental revenue to come in the medium term, not immediately in 2022. Okay, so what else do you have? Business outlook. SoFi, okay, you know probably what the outlook for. Okay, let's see. SoFi targets young, high-income individuals that may be underserved by traditional full-service banks. The company is purely digital and engages with its clients exclusively through its mobile app and website, unlike existing digital banks, which generally have limited product offerings. SoFi offers a full suite of financial services and products that includes everything from student loans to estate planning. Okay, and let's see what's then down here. The bulls say that SoFi has managed to rapidly launch an impressive array of products and services, and the company remains the only firm offering a digital full-service model. SoFi has enjoyed rapid growth driven by the introduction of new products and broader adoption of digital banking. The company's acquisition of Galileo was likely a major win, as the number of accounts using Galileo's. Let's find out what we're using what. Did we miss anything there? Using Galileo, missed something there. Okay, the company's acquisition of Galileo was likely a major win, as the number of accounts using Galileo platform has risen sharply since the purchase. Okay, the bear case is, or the bears say that SoFi's revenue growth comes at the cost of rapid growth in the company's expenses, and SoFi remains unprofitable. SoFi's lending model leaves it reliant on external demand for the loans it generates. Many of SoFi's products and services are the result of partnerships or are easy to replicate, creating the risk of future competition. So, and their view is that SoFi has identified an unfilled product need in the marketplace that could potentially allow the company to build a defensible competitive edge. In other words, what they have, according to Michael Miller, what they have identified will enable them to broaden their economic moat. Economic moat is a defensible competitive advantage. So The company targets young high-income individuals that may be underserved by traditional full-service banks. We know that already. So let's see what's next down here. Let's see. Do you want to hear about that one? Risk and uncertainty. They assign a high risk and uncertainty rating to SoFi. SoFi's finances are in a strong position, particularly after the company used a portion of the proceeds in the Sparks merger to pay off its revolving line of credit. However, the nature of the company's revenue streams, its reliance on capital markets, and the untested nature of its business model and add substantial uncertainty. So while they expect SoFi's other segments to provide an increasingly large portion of its revenue over time, for now SoFi generates the majority of its income through its lending business. Okay, let's see what's down here. Capital allocation. Okay, they assign a standard capital allocation rating to SoFi. Okay. Okay, I think you've seen the rest of the other things that they are talking about over there. I think you already know about that. They have acquired a license to become a bank. Let's see. I think we have seen this economic mode as well. Yes. Okay. Yes, that's economic mode there. Yeah. So that's what we're talking about. So the stock itself now today, the 22nd of February 2022. It says here price reaching new 52-week low of $10.19. This is beneath the previous low of 10.51 by 3.04%, and it is 59.16% below the 52-week high of $24.95. So SoFi stock, yes, as you can evidently see, it it's now at its 52-week low, and in that session it's touched that 52-week low and still remained there, touched it and bounced off a bit, but still maintained that low price, low price. Yes, still maintained that 52-week low. Maintained it pretty much towards the end of this session of the 22nd of February. So what we have here is that on this daily chart, you can see that momentum unbalanced volume indicator has to be negative. I believe it's negative, and momentum is waning. It's almost oversold pretty much, I believe. RSI is also retracing. Accumulation and distribution is bearish. The trend of that of this indicator is a bearish one. And of late, I think the volume for this session wasn't a heavy one. It wasn't. Okay, it was above average. Okay, so it says here SoFi appears to be consolidating within a longer term downtrend. Shares are presently below a 200-day moving average, which is falling along with the 10-day moving average. However, the average directional index indicates the average directional index, or ADX, is below 20, indicating that the shares have exhibited sideways movement. But of late, what we're seeing here is that it was moving sideways, but maybe because of what has happened today, that has not really shifted the general conclusion concerning the trend of the stock. So momentum is strongly bearish. The 14 period slow stochastic oscillator is below 20, the level which many analysts call oversold. This means that investors have been actively selling shares and driving the price lower. The volume for this session was heavier than usual, trading 75.175 million shares versus an average of 25.058 million shares per day during the last 12 months. The unbalanced volume indicator is bearish. The slope of the indicator is negative and suggests that there is a lack of buying interest. So there's a lack of buying interest, and buyers and investors have been selling the shares and driving the price lower. And I think what happens sometimes with a heavy volume, it's an indication that maybe some market participants may have moved away. So there's a good chance the stock might move may move sideways in the coming session. It may move sideways, or it may also rally, because what we're seeing now, it looks like a bottom. We are seeing a heavy volume. We saw a heavy volume, above average volume. It just means that the people who are selling are exiting. There's a good chance that the majority of those who who were responsible for this 75.2 million shares were departing, exiting the stock and going to other markets, other stocks to see what's going on there. So by doing so, they are also putting the stock in at its bottom. So this might be the bottom for now. This might be, it might be technically be, or there's a good chance it might still be trading around this $10 range. Given what has just happened. Given the fact that its momentum is totally bearish. And I mean, largely, because of this volume, because of this heavy volume. So that's probably what is going on now. That is what the case is probably. That's probably what the case is. So I think it's near its bottom at the moment. I think so. There's a good chance that is where it might be, trade within this $10 and $9 range. Expect it to do so. And maybe in the coming sessions, it may begin to extend again when the market participants that left now have done other things and decide to come back to it. It's the prospects. It has the prospects and sounds good. I think a lot of recent investors very much they love the stock. So see what you make of SoFi stock, and I will continue to update you. Thank you very much for watching this video.